All right, 7:30 on the nose. So, same as always, hit the chat. Let me know that everything is working properly as it should be now that we are a go. All right, we'll let a couple of you stroll on in here as you join us on a Saturday. Thank you. That's awesome. I know timing can be difficult for people, especially on the weekend. This is a holiday weekend in America. Long weekend. Labor Day. Very nice. Very nice. All right. So today, a little bit special, a little bit more than just a daily close. We're closing out the monthly and the quarterly as well. So we're going to take a look at all those sort of one step at a time. We'll take a look at the earlier view. Now we'll take a look at the daily. And then we'll move up to a weekly because we're going to close that out tomorrow. So we'll just get an idea of what kind of picture that's painting. We'll move up to the monthly because we're closing that out tonight. And then we'll move into the quarterly because that's a chart we don't really get to put up all that often. So now that we're coming into a quarterly closing, it makes a little bit of sense. So daily chart, even though a lot of price moved up today in a significant way, we did get stopped out again right at that 100 EMA. So we talked about this in the daily update. We talked about it going back to last week, how the 100 DMA, the daily moving average, was acting as support, but it wasn't as clean, right? Where the 100, this is pink line right here, came up and that acted as support as well. So when we lost the 100 moving average, we've then incorporated the 100 exponential moving average, which is this guy right here, the pink one. So you can see hesitation closed up above it, and when we broke down out of that level of support, pushed back up again, it just acted as resistance, and now 2 days in a row we've slapped up right to it and got knocked right back down. So resistance again at that 100 EMA. Our 21 weekly EMA is sitting around this level over here, moved up slightly as price action moved, so it should be just about 9,000. We'll pull that up once we throw the weekly chart up, so nothing too crazy there. We're still pretty far away from it at the present moment. So unless we get a flash crash down there, hang on tight, guys. All right. So as far as daily's concerned, price action is buyback, right? We're painting a bit of a pennant, and because the preceding price action is downward, right, we're looking at a bear pennant. That's what it's painting at the present moment, and you can see that just by doing something like this, throwing your lines on here and saying, okay, what do I got? It's a bit of a symmetrical triangle with preceding downtrend would equal a bear pennant. So, of course, it's something that we're looking at. We're keeping our eyes on it. This is very much a no-trade zone for a lot of traders. One, it's the end of the month. All right, big sell-off time. Two, it's a holiday weekend in America, low volume. Let's put that volume on. We talked about it in the daily update, and it is the worst that we've seen in an extremely long time. When we were looking at the update earlier this morning, we were trying to find the last node that was on pace to be as low as this node, and it went all the way back to 6K. So let's see where we're at here. Ballpark. There is not one volume node on the screen that is as low as the current volume node. And currently I'm back to December of 18. So I got to go back. This is what we're looking at this morning on the update. This node right here seemed like it was the lowest in this whole cycle. And we were on pace to be just as low, if not lower. And wow, that is brutal. That is really bad. So volume node here, daily chart, November 2nd, 2018. We haven't seen volume this terrible since November. All right, early November. So quite a long time ago. So again, that screams volatility, right? That means, anybody with the sizable amount of capital in Bitcoin can move this thing very easily. There's very little resistance either way. Not a lot of people trading it, so there's very little interest in trading it, which does open the market up for some of the altcoins to play around. And then some of them did have some fairly good pops today. All right, but like you'll notice with those, unable to sustain them, right? Because like a true trend is a trend for a reason, right? It has support to back it up. The price action makes sense. People want to buy, so the price goes up. People are taking profits, so there's liquidity to sell. And it's this ecosystem that works in trading. There's a beautiful balance with an uptrend and a downtrend that makes perfect sense if you're a buyer, and it makes just as good sense if you're a seller. We don't have that right now. We're stuck trading underneath this particular trend, not to mention this particular trend as well, which is the swing fail that started over at 14K. So we got some things to work through here. Losing this, right, and a further push down, we've got a bunch of support levels. They're all in the update. We'll cover each one if you want. Coming up, we got a ton of resistance. Now every MA, EMA is an object of resistance. So it causes more strength that you need per candle in order to push up through it. So something very volatile, something very bullish, some type of catalyst is the type of thing that just rips right through all of those things and pretends like they're not even there. Otherwise, the battle to get back those levels is a one candle at a time play, and price action becomes very, very, very tricky. Not impossible, it just becomes tricky. All right, so that's the daily. Currently, bear pennant, looking for further downside. Retest up to, not even a retest, just another test and fail to the trend would make sense. Price action up to 99, 10K. That's totally fine. We could absolutely see that happen, and then further downside. So I wouldn't be getting bullish on the price until we had a clean break, and close above, first off, just this trend line here. So we're talking, let's get back to 10K. Let's see the reaction on the 100 DMA on the daily chart when price gets to it. But to come up, hit that fine resistance and push back down even further, that makes sense. So if you start seeing the price go up 200, 300, 400, don't all of a sudden think bull market, it's time to go. It may very well be, but chances are it's not. And with this volume, this volume is disgusting volume. It is as low as it can be. This is not good. The volume is not good. Any price action movement you see on volume this low, I don't put a whole lot of faith into it. So if this was a massive bullish candle and there was, 15 people who got it up there, I'm not putting any faith in that move. Are you? No. Why would you? All right, so let's take a look at the weekly. Even though we're not closing it right now, it's still something to look at. We're going to close it tomorrow, so it's not like we're far away from it. And actually, I wanted to bring up, I'm going to bring up a different chart, so everybody close your eyes. I know the brightness is going away. We're going back to, hey, look at that. We're back. We're back. All right, so let's get on to the weekly chart. And I want to show you something. So this is just a clean chart I had. I got too much going on that other chart for me to do zoom outs into weekly and quarterly. So I had to start another chart. Sorry about that. So I'm sure everybody will be okay with it. All right, you'll notice when you move from monthlies to weeklies to dailies, you'll have to readjust all your trends. So just try to find a happy medium. I set them on the longer time frames and then tighten them up to local price action as I zoom in. Not everybody does the same thing, but and I say that because this line down here is going to become a talking point while we stream, because it makes the trend look very, very, very different, and really what changes everything. Here's the deal: weekly chart, right? A big flip, resistance, further downside, right? It's a huge difference of having that as opposed to having the trend look a little bit different, where you got something going on like this. Let me get it over there. I had it earlier. This is what happens when you cycle too many freaking charts. All right, where was it? Well, I'd like to find it for you, but I'm having some difficulties. It showed the trend. It'll be easier to. I'll show you on the monthly chart. It showed the trend where we crossed up over it. It was on the monthly. I'll show you on the monthly chart. So yeah, it's just a trend line. I hear you. It's all good, but people do make some decisions off of it. This chart goes back to 2011. Bitstamp has some of the most history out there, and that's why you'll see that stamp chart referenced a lot when it comes to parabolas and fractals and anything with like massive historical significance to it. But anyway, let's look at the candles just for the candles themselves, and we'll see how the weekly's looking. Now, this is the 20-day MA, not the EMA. So I'm going to throw the EMA on there just so you can see what it's like. We'll go here. We'll just chuck in an EMA real quick. Boom, boom, bang, bang. So that's this orange guy. Double click on that. Make that 21. And let's see what color you guys want. I feel like you guys want green. What do you think? Am I right? Wrong? I'm going to thicken that up so it's super easy to see. Boom. There you have it. So your 21 EMA, Jacob did a whole study on the way it interacted with price over the course of years and years and years, especially during parabolic movements. And it turns out that it's a very key exponential moving average on the weekly chart. So here we are. We're looking at 89.79. All right. Touching down to here would make a ton of sense. All right. So just even a wick down there makes a lot of sense. That gives indication that once you tap it and have found support on it, it's sort of like the green light. Like, all right, we're cool. Now we can trade a little bit higher. Now we can start pushing for new highs. The weekly itself, it's bearish. There's not a whole lot bullish about this, except this support level here is pretty solid. As far as closing below 95, it hasn't happened on the weekly. So we're good in that regard. It's not structure. Structure would actually coincide with 21 EMA. Top side structure, the top of this candle, the high, 90.96. Really, the body open would be a little bit better because as you see here, this was resistance, this was resistance, this was resistance. We smashed through it, and we didn't quite come back down low enough to test it. We came close, just not low enough. And that would be somewhere around 8,700. Ballpark figure. So that's a good level, weekly level of support. So if we were to lose our 21 weekly EMA, finding support on that weekly level, and we'll just call it 8,700. So look for 8,700 downside movements. And that's a sizable candle from where we're trading today, but it's not out of the realm of possibility. Don't think that it's not. It's absolutely doable. The upside right? The bullish scenario is this: lower weekly volume on a downtrend, right? This is like a local downtrend. If you count this level as support and you have price further dropping down, right, and sort of coiling itself up into a bit of an apex, you'd have a descending triangle there. So, very easy to see. We'll just throw a trend line on here. Bang, something like that. Bang, bang. We'll have to make that white so you can see it. And then we'll put another one over here as like our kind of like our little support zone, like this. And there you go. Descending triangle. So a descending triangle, right, can break either way, but a descending triangle, on the top side of a trend, right, would sort of beg to fall out from the bottom. It's a little. It's not as typical to see this at the top of an uptrend, a local trend, but we see them. Now, if you don't want it to be, this is where analysts can differ from one to the other in a split second. Now it's a symmetrical triangle. Whoa, that changes everything, because a symmetrical triangle on top of an uptrend is a pennant, and that would be a bull pennant. So a bull pennant would then get you this monster move with a monster move to the upside, and typically it would break to the upside. So, there's 100 different ways to look at this. If we look at weekly support or weekly resistance levels, it would be this, right? Top side, rejection. So this comes back here, right? If you're familiar with TradingView, you just press and hold shift, right? And you'll get your line. That'll be perfectly horizontal. And then this level right here. So you go like that. All right. And for the most part, we could say, if you really wanted to be super analytical about it, you'd do that and say, okay, well, we've never closed a weekly candle above this level, right? 11,400, we'll just call. That becomes a monster level of resistance. Well, at the same token, we haven't closed a weekly candle below, let's get this number, 90, we'll call it 9,500. So between 9,500 and 11,500, right, you have a $2,000 channel, $2,000 channel, trading channel. Nothing's going above it, nothing's going below it. And the second you do, right, that's your bias, regardless of all the other price action, right? So there's a lot of different ways to analyze a chart. There's a lot of different ways to look at it. There's a lot of different ways to put your lines. The thing is, they should make sense. That's all. And if they make sense, and it's something that you want to play, then you play, right? Generally speaking, you want to have confidence in what you're trading, and you want to have confluence in what you see with something else to sort of push you into the realm of your probable chance of this happening is X. And you don't need to put a number on it. It doesn't have to be the probable chance of this happening is 35%. You just have to say to yourself as a trader, it's more probable that price is going to go down since we broke this magical line, or it's more probable that the price is going to go up because we haven't closed below this level. Why would we do it right now? So lots of different ways to look at it. That's something that I do want to point out to you. And that is going to come into play right now as we swing over to the monthly candle close. So monthly candle close, super cool. I love these super high time frame charts because we just don't look at them often enough. And when you do, it's really cool. Because you get to remove yourself from the noise of all that intraday stuff and really, hone into what's happening on the bigger picture. So on the bigger picture, clearly in an uptrend. This is the big drop, right? From 6, right, down to, 31.21, 33.20, like whatever chart you're on is going to be different. Stamp, I think, was 31.22 was the low. But look, it's like a little BART, it's like a little inverse BART. It's like really no big deal when you're on a monthly chart. It just doesn't seem to be so dramatic. Yet, I don't know how new you are into crypto, but living through, this 18-month, I think what are we close to 20 months downtrend has been an experience, to say the least. All right. Now, all the intraday stuff, the hourly, the 4-hour, the 12-hour, right? The daily, we look at it and it's the doom and gloom and blah, blah, blah. Look at the pullback. It's a blip on the map. It's a freaking joke, right? It's nothing. It's so minimal in the bigger picture that this helps to put confidence back in traders. This helps to open their eyes back again to the bigger picture, right? It's cool. We're going up. Now, that being said, you don't want to be naive about it. We have a monster trend line here from 2011, right? Currently, that more or less signified our break to our drop, right? Because that's the candle that broke. And when you broke the trend, that is when you got your new low. Look at where you found support. The 50 moving average, that's this orange line on the monthly chart. I mean, it just swooped right in there and was like, I got you. Don't worry, man. I got you. Like, cool. Thanks, dude. You gave us a huge bump, and here we are. We came up. This big drop, this huge drop back here to like 74, 73, 72. The one that's barely anything. That's that first test, right? After crossing bullish on your 20 MA on the monthly chart. Huge. That's huge. All right, but look at the trend. Look at the trend. So we talk about support resistance flips all the time, right? Here's your support. You could see how many times price acted as support. I mean, look at this. This is bananas. But look, now you lost it. And a proper flip. I mean, sure, it took like 9 months to do it, but it's still a flip nonetheless. If I only looked at the monthly chart, I'd be bearish. Okay, that's, and that's one way to look at things. There might be a ton of people who look at this chart right here, this exact thing, and they're like, yeah, dude, like, until we cross that trend, I'm out. And, there's confluence with that, and there's confluence or non-confluence against that, or confluence against it, however you want to word it. There's further reasoning to say, okay, further downside. But how much downside are we talking? It's not like this is a measured move. It's not like we're expected to come back to $1,000 or $1,200. This could simply just mean we tap down again on the 20, find support, push up, break through, close, and now we're back into our rising wedge. Okay, rising wedges though do typically break out where? On the downside. All right, so monthly chart. The thing about this candlestick pattern, we talked about this in the update, was if this was on the top of an uptrend, it'd be a shooting star. If it was on the end or the bottom of a downtrend, right, then we'd call it an inverted hammer. But the difference is the placement to where it is. 3 candles, I'm not 100% sure I want to call this a downtrend. And if I don't want to call it a downtrend, then I can't exactly call that an inverted hammer. If I had a downtrend significant like this, and then I had that candle right here, yes, I would call reversal, and we, according to Japanese candlestick patterns, we'd be on our way up, or at least more probable that we would be going up. The placement, though, is not great, right? So candlestick monthly, pseudo inverted hammer. But the psychology remains, right? Look at the previous 2 monthly closes and ask yourself if this giant wick is bullish or if the giant wick is bearish. Now, what does that mean? A wick is a representation of price, right, that happened inside of that period, but outside of open and close, right? So if a candle is bearish, right, then it closed lower, right, than where it opened, right? And that's what we're looking at right here. So let me get my little pointer out here, and I'm gonna play teacher for a second. So that's clearly not gonna work. Here we go. So in a bullish candle, let's just take this guy for example. In a bullish candle, the close of the candle is above the open. So clearly we opened here, price did this, it came all the way up here, it came down and closed right here. All right, easy peasy. In a bearish candle, the open, right, ends up being higher than the close. Why? Because it's a bearish candle. We lost price. Now we lost even further here, and then price came back up, right? But the candle itself has a lower close than where it opened. So it's a bearish candle. Here, same thing. It's a bearish candle. The push was all the way up here, right? So we pushed all the way to 12,325. The problem is you're not able to maintain it, okay? You want to push like this and maintain it. You want to maintain it. Not to mention, it didn't even get back to open, right? So it's a bearish candle 1, right? And it shows massive selling at these levels. Really, anything above this level, 10,760, has been a huge win for the bears. It's all selling, it's selling, and it's selling. What does that mean? There's a ton of liquidity down here for the sellers. All right, so the sellers can get out. They can pull profits. Maybe they bought at 31, 32. Maybe they bought at 35. Maybe they bought at 6. Who cares, right? If they're pulling profits, and they're all pulling profits here at 10,800, then it's going to be a very difficult level to get through because you have to eat all of those orders. For every seller who's trying to sell at 10.8, you need a buyer who's willing to buy at 10.8 and another one who's willing to buy at 10.801, right? And you have to take all of the sell orders off the table for you to then push the price up and close it above there. So that's your shortened lesson on supply and demand. All right. So again, monthly, these wicks are in favor of the bears. That certainly doesn't mean within 30 days we can't just simply push lower, find support, and push back up and turn it into a bullish candle. All right. This is not like end of days here. This is just simply reading the candle for what the candle is telling us. All right, quarterly. Now, this is a chart you don't see every day. And this was the chart I was talking about. So, trend line, look how different, everything's the same, but look how different it looks. We're currently trading on the line, if not slightly over the line, which would mean something 100% different. We got to push, break, and close above trend, right? This would be your kickback support retest and then further upside back into our channel / rising wedge. The difference here is you need to notice how charts work on higher time frames. All right, so the next candle that comes in is going to be destined to one spot, right? It's on the middle of the candle is going to ride right here, right? It's destined to be right here. It cannot be anywhere else. That's exactly how these charts work, which means if you want this candle to open in the rising wedge, you've now forced price to be at $14,000 just to open in the wedge because of the distance between candles. This is on every chart. You can do this on a 1 minute chart, a 5 minute chart, 15 minute chart. It doesn't matter. It's just that the resolution is so much better on the tighter time frames that you barely even notice. Riding a trend, you ride the trend. It's super easy. Monthly, weekly charts get a little hazy. Monthlies get even more hazy, and a 3-month chart, a quarterly chart is crazy, right? So look at the price difference you would have to get to do this. So let me show you where the price will be right now. If we close right now, and we're closing, we just closed 801. So we just closed it right here. So the body of the candle is going to sit right here, and look how far away it is from just from getting back to our level. Not our level, but to our little wedge here. A 41% move is what you would need. It's incredible. That can't be right. Is that right? 46%? It's a $4,000 move. Yeah, you'd have to get back to 14,000. You're at 10,000 right now. Insane. Right? Crazy stuff. So clearly, we didn't do that. Candle just closed. So we're moving on from quarterly. So let's just take a look at how the quarterly does look. Price action speaking, it's fine. Good push up. Come back down. Found support right on our, let's see, that should be our 100. Let me double check this EMA right here so that we have the right number. It's our MA. That's a 21. 21 MA. Is that not an EMA? Let's just double check that one more time, guys. No, that should be an EMA. EMA. Okay. 21 EMA. So not only is it good on the weekly, look, it is doing good on the quarterly as well. Look at that. Support, support, support. Bang, bang, bang. Perfect. All right. So anyway, found support right here. Quarterly chart. Came up. Minor pullback. Look at the pullback. Like, that's what I mean by remove the noise, take a step back, get out of the tunnel vision, and take a look at the macro view just to get an idea on what's shaking, right? And that's what's shaking. A minor pullback, right, to a really bullish candle. You can call it bullish engulfing. You can call it whatever you want. But this one candle smashed, right? 1, 2, 3, 4 candles worth. An entire year's worth of trading was encapsulated and closed above in one candle. One candle. So that's a pretty strong candle. So that type of candle needs a pullback. And that's what we're getting right now, a pullback. Look at this massive candle. And look at this pullback. Right? If we were on a 4-hour chart and you saw this candle and that pullback, you'd be like, this is a joke. It's nothing. Right? Don't confuse the fact that this is Bitcoin with anything else, right? A minor pullback is a minor pullback, and that's all it is. All right, so good stuff. We're back. Everybody, close your eyes and then prepare to be blind. Blind time. There you go. So we are back, and this is the daily candle close. Right, we just closed it down, so let's get our numbers. This was a relatively weak trading day. Not relatively. This was an extremely weak trading day. We opened the candle 95.69. We hit a high of 96.82. Low dropped it down to 94.43. Closed it out at 95.94 plus $14. $14. 1, 4. That's a 10 and 4 singles. 0.15%. So, clearly a doji candle. You're basically equidistant in price action, north side, south side, although you did get a little further south side than you did north. But remember, the north side, you slapped your head right on that 100 EMA. Daily chart. Smashed it right here. Perfect. Okay? We are also painting ourselves a, bear pennant, symmetrical triangle, however you want to word it, it's fine. We'll throw that up here so everybody can visually, stare in awe of its beauty of patterns and the like. Okay, yeah, I mean something like that. So clearly on the daily it looks like crap. Throw it on the hourly, and you're like, oh my god, look at all that price action. It looks amazing. So there you go. There's all that beautiful, amazing price action. It's very similar to that baked beans commercial where I rolled that beautiful bean footage. Same thing. This is your beautiful hourly footage, right? Nice. So you can see like the low side, higher lows, and then right here you kind of got tripped up a little bit, right? A little double bottom, kind of messed up the whole price action. Here you had your high, you had your lower high, you got your lower high, so you're still straight here as far as you're making lower highs, and here you're basically making higher lows, except for this little false breakout smash retest action you had over there. But again, the trading, abysmal. The volume was so bad, was so awful. We didn't see volume this pathetic since November of 2018, right? So really, really bad volume and a horrible time. Holiday weekend, end of the month, right? We talk about these things because we feel that they're important. And that's, any trade in this ballpark is going to be a riskier trade because of just that. Because, you do have very little liquidity. You do have high volatility, and it's doing something to the market, right? So if we were to come over here, let's let this refresh real quick, and just take a look at what the market did in the last 24 hours. You had a couple pops, right? But you need sustainability in those trends. You need other people to want to buy as well. And that's how you can establish a trend. You can't establish a trend with just one person pushing the price up. That's just a pump and dump that never caught on, and that guy got screwed. You actually need consistent trading. You need that price action to breathe, and you need the trend to gain momentum. And without any of that, you're just going to get a little pump, and you're going to give it all right back. So EOS popped for 3.5% in the last 24 hours. Stellar, good old-fashioned Stellar Lumens, up almost 1%. We're talking 1%, people. We've had trades that went 60%. 1% in the last 24 hours is not showing a whole lot of confidence in the market, right? 7.3 on Lambda. Lambda. Very similar to, who remembers Revenge of the Nerds? Anybody? Oh, I got to take a look at chat. Give me 1 second. Bytecoin, Theta, EDU Care, for real? Is anybody in this? Probably not. All right, up 3%. Mixin, 5. Oasis City. Don't know any fundamentals on it. I know that it's about 30 days old, and it's up 36%, right? But by large, besides Dragon Coins going 52%, the last 24 hours of trading have been fairly red. If not stable, minor pops here and there, and then that's a wrap. We had Dusk over here. So when we look at Dusk and we say, all right, for the trade that it was, right, it had the right setup. It actually popped for a little while. We'll pop that up here right now. Dusk, BTC. And the thing is, like, if you're not right on top of it, it's tough to capture. But look at the move and look at where it stopped. 100 EMA on the hourly chart, right? And it was a great move. It's just that without enough volume and without enough momentum and without capturing the moment, finding support on a pullback instead of failing support on a pullback, it's very difficult. Now, this may have a second wind to it. This may say, okay, sorry about that, guys. Let's do it for real this time. Now I got my boys with me, and maybe not. That's the thing. So let me scope out chat real quick here. What's good? Swing, what's up? Do you always trade off log, or do you only use it for higher? I use it for 80 99% of all my charts. I got used to the visual difference between log and arithmetic, metric. You know what I'm talking about. Non-log. And as I talked to more and more traders, they were using log as well. And I'm of the mindset that I want to see what the rest of the market sees. And so when I draw a trend line, I want other people to draw that trend line similar so that I know what other traders are looking at. And it's just that simple. I might use an indicator that I hate only because 90% of the market uses it and they make trading decisions off of it. And so if I need an edge in the market, I want to know what these people are doing. And that helps, right? So I don't want trend lines that are very different than my fellow traders and also the bots and the counter traders, right? So I want to see what they see, right? We're all traders and, of course we're all friends, but within the market, right, you're trading other traders, right? Like, not that it's a competition, but it's like I might be buying from you or you might be buying from me. If we all thought exactly the same, there would be a lopsided form of liquidity. Everybody would be buying and there'd be nobody selling, or vice versa. And the world does not work that way. It has this natural way of just balancing out differences between traders, between everything. And that's just one more example. All right, let's see. Kevin Lewis says, what's poppin', SP family? Kevin Lewis, what is up? MMLL, ouch. That could be in reference to anything, but I'm sorry. Probably. Maybe. I didn't mean it. Also, what level do we have to break on BTC in order for us to be considered in a bear market? Okay, that's a good question. So a lot of people will do this. They'll take a look at the weekly chart, and they'll throw their MAs on. Oh, are they already on? Oh, that's dusk. It's a holiday, guys. You know what I mean? I'm doing my best here. All right, so on a weekly chart, let's get rid of everything because I got some theory things there that nobody really needs to look at. Weekly chart. All right, if you're looking at the 20 MA, that's this red line right here. Okay, trading above the 20 MA on the weekly chart is considered bullish. Trading below the 21 on a weekly chart is considered bearish. We are coming up to the 20 MA on the weekly chart, which is sitting at 9,069. And this is very similar to the 21 EMA for the weekly chart, which we are also referencing a lot as, a touchdown, bottom support, liftoff type zone. All right, like a little secret buy area. So that's one way to look at it. On the daily chart, a lot of traders will use the didn't want to do that. Didn't want to do a 24-day chart because that just didn't make any sense. So where are we at? It should be the 200. What is it? That is orange. Yes. So the thicker of the two orange, that's this guy right here, under the 200 moving average daily chart is considered bearish. Above the 200 moving average daily chart is considered bullish. Very, very, very bullish here. And bottom level, touchdown level, 75.50. So you have all of that room to go, and you're still technically considered in a bull trend. All right. Now, That being said, I don't 100% agree with that because I have to be difficult. So here's what I look at. I like price action. So for me, if we're looking at this zone here, if we're looking at this trend, right, and we want to be considered bull market material, for me, I want to take some levels back, and minimum is the 618. All right, so basically you find your high. Right. Oh, geez, I'm sorry, guys. Don't worry about it. All of that stuff is going to disappear really soon. Yeah, you'll be fine. Minimum is the 618, sitting around 13,000. Right, so we were there. We had a break and close above, and we failed around 14. All right, that's minimum. Right, ideally, you've recovered your 786, and that's, we'll call it 16,000, 15,899. That doesn't mean obviously you had to go from bottom to top to get there, but all things considered, a lot of bullish trading had to happen to get there, but there's still a ton of room for it to go back down. I love advanced ABCD patterns, harmonic patterns, and a ton of them use a 786 as a pivot point, as a major swing fail during a trend up. So your impulse move. So let me show you, like, your impulse move. This would be your X, right, to A, and then you would have like a 618 pullback, let's just say, ballpark figure, something like that. But then you would have like a 786, like that. And then like let's say a confluence down here to like a either, I'll call it like an 886, right? And this would be this should be like a bullish Garley ballpark. All right, but anyway, this becomes a major swing fail. You know, where if you draw the lines out, right, you see. Oh no, what did I do? Oh, is it white again? Yeah, I did. This is what happens when you when you flip back and forth between a white background and a black background. It gets confusing. So here you go. There's your one line. You know, you connect your X to your D, blah blah blah. You know, you see as you start to look for them, you'll see more and more of them. They're super cool. I love these patterns. There's a ton of them. There's a shark. There's a Gartley. There's a cipher. There's a bat. There's a butterfly. A crab. You know, all that nonsense. But it's all really cool stuff. So anyway, that's a monster level and a huge target for a lot of traders to look for resistance so that they can start planning for a D target so that they can plan for their bullish retracements. 382, 618, back to B, 1 for 1, 127, 14, 1618, something like that. All right, so crazy stuff, cool stuff, very, very cool. All right. Let's go back to Chet here. Let's see. Would you recommend setting some buy orders around the 20? Yeah. So, we're looking at that as a buy zone, right? And you may only get a flash wick down. So set yourself up with a clear invalidation, and you could buy it all day long. Just don't buy it and then not be prepared for it to go lower. You know, if you tap down on the 21 EMA and that it only, stutter steps for a day and then drops another, 15%, well, then that's a problem if you're on leverage, right? If you're just spot buying, then it's whatever. You know what I mean? You can't get liquidated on a spot buy. And, any really like buy orders, you have to come up with a number in your head that works. For me, it's like 10K. Like anything under 10,000 to me is a good buy, right? Because I visually see Bitcoin well over 20. So it's a double your money, right? So they have like DCA, right? Dollar cost average. So dollar cost average is essentially saying, I don't care what the price is, I'm putting $100 into Bitcoin every week, every paycheck, right? And after you got, 200 payments in there or whatever, right? You average everything down and that becomes what you paid. So sure, one week you paid $3,200, but another week you paid $14,000, right? It sounds, pretty terrible, right? But when you average them down, you're like, oh, I paid like $7,000, $8,000 or whatever, and price is currently at 10,000. Guess what? You're up. So yeah, it's a fantastic idea to set it up as a buy, but look at the current local trend first. If it looks extremely bearish, then why would you buy the 21? Hang out for a second. Let it do its thing. If it looks like it is right now, then there's a chance we might only just wick to it. And if that's the case, then a buy order on the 21 with an instant buyback of, a couple $100 would be fantastic, right? That's a great buy. Bruno Zeg says no sound, but we're about an hour into the stream and no one else said that. So I would imagine all you have to do is refresh, check the mute button on the stream, right? You can mute the video itself, or you can mute the tab. So double check both of those. If you have to refresh, try that, like a hard refresh. Out for the weekly close below the retest. Yeah, sorry, buddy. Something interesting. We are right now bouncing for the third time off the 618 from the all-time high to 3K low. Yeah, so that's, are you sure? I thought the 618 was much higher. Yeah, the 618 is right here. 13,346. So we're nowhere near that. Something interesting. We are right now about no. So MM, after initially hitting the 6.5 golden zone. So the golden pocket is between the 5 and the 618. All right, that's considered the golden pocket. So as you cross the 5, you have now entered the golden pocket. And when you have hit the 618, you've hit the golden ratio. The 618 is the bee's knees when it comes to Fibonacci, and even that's incorrect, right? The 1618 is the bee's knees. But because as traders, we've converted Fibonacci to a 0 to 100 scale, then the 618 becomes the bee's knees. And the extension is amazing, but it's used far less often than where we're at right now. So MM, you got to double check. We did like a whole thing on Fibs last night. So if you weren't here and you hit the replay on that, we cover. We don't go into extensions just yet. We're gonna fill that void. But hopefully that'll answer some of your questions. But if you're, look at my chart, if you're set up, and I'll throw it on the weekly just to clean things up a bit. If you're set up like this, there's no way your 618 is reading anything but 13,000 and change, right? It depends on what chart you're on. I'm on Bitstamp. But the high is right here. The low is right here. Your 618 is right here. All right. We are currently trading, let's see, the actual price action right now is like just above the 382, which is right here. 382 shows up 94.41. All right. Let's see, Paul. I'm just starting to learn the harmonic patterns and cipher patterns. Fantastic. Cipher with the Y, Paul. Come on, buddy. You're killing me here. Killing me. Sorry, meant from 3K low to all time. So you got a reverse fib? Yeah, if you're pulling from 3 to 20, right? That's it's not going to fly. You're not measuring anything here. You're not measuring future, which is what you want, right? You want to pull left to right because this is what you're measuring, right? You're looking for areas of resistance and support based off of a 0 to 100 scale from here. You know what I'm saying? You know, this being your 100 mark, right? You want to get back to 100%. This being your 0 mark, that's your floor, and everything in between is your scale back up. 23% back, 38% back, 61% back, 88% back. 1 to 1 equals 100% back. You're back at the price that started it all. All right. So do you think BACT will have a positive or negative outcome on the market? Oh, BACT. So here's the deal with BACT. Let me pull this chart up for Felipe M. Coinbase would be fine. All right. BACT, because of what BACT is, because of who BACT is attracting, and because of how BACT operates, everything fundamentally about it is bullish, right? It's appealing to larger investors. It operates in the fashion that by physically deliverable, and of course, you know, you can't physically deliver digital code. I mean, I guess, yeah, I mean, but you know what I'm saying. The idea is they have to actually buy it, right? Which is a transaction. And whether it's on the market or not, as many people have debated before, so they're saying, well, if it's off the market, then, you know, who cares? I care. Because it's a transaction on the blockchain. It's far more important than it is on an exchange. All right. So consider the long-term benefits and consider the long play as it comes to Bitcoin. Bitcoin needs to be used. Okay. They need us as pioneers to use it. If no one uses it to buy stuff or to trade stuff, and all we do is just trade it back and forth to each other, it'll never grow into what it needs to grow into. It would be no different than trading, you know, baseball cards as a collector's item, right? An 86 Donruss Jose Canseco rookie card has no other apparent value outside of being a collectible. Sure, you can use it to, scrape the table crumbs off of the table, and you might be able to use it as, like a little baby ruler, and maybe get a straight edge on a piece of paper. There's 1,000 things you can do with a card of that size, right? But not being able to use it makes it a collectible. Using Bitcoin, adding transactions onto the block for the life and long-term view for Bitcoin and all of cryptocurrency is a huge benefit. All right. So do I think it will have a positive? Yeah, I think it'll be a positive impact. There's a debate going around on whether it's already priced in, as if this, well, this is Ethereum, but these charts look very similar, as if the low at 31 was pricing in BACT, and that's why we got back to 14. That's a debate. And I mean, it's not the time or place for that debate. But it's a debate. And I'm 100% crypto. So I'd love to hear both sides. I'd like to hear the arguments and see if any of them are valid in any way. I'm sure there's things that I haven't thought of on both sides that could sway my opinion, which would be cool. I'm 100% down for that. The way I see it as being good for the entire ecosystem. It could have short-term downfalls, and it could have a negative impact right away. It could have very good long-term outlook potential, or it could have very negative long-term effects, similar to like CME futures and leverage trading that has really hammered down on Bitcoin and, essentially gave the keys to the short sellers. So that's a whole nother debate. Leverage trading destroyed Bitcoin. I don't agree, but it's not like it's not a phrase that's spoken. So I think it'll be good. I don't think we're going to see a, $2,000 candle because of it. It's been so talked about for so long that I think everyone's kind of numb to it until it actually happens. How many times in crypto have you been disappointed by something where this project is going to do this, and that, and then they just show up to Vegas, they give you a t-shirt, and then they disappear. So not cool. And, backed as responsible as a team as they may be on paper, we know that they're owned by the New York Stock Exchange, the ICE division. It's no small venture. They're based out of the United States, so of course they got all their SEC stuff squared away. And what? A few months ago, they were set to launch, and then they didn't. So no different than anything else in this space as of yet. The Color of Money or whatever that movie was. Show me the money. Just show me the product. Make it real. Make it tangible. Make it legit, right? And then we could start to react. But I think people got sick and tired of reacting just for disappointment. It gets old. All right, so Ethereum, USD, Felipe. Oh, well, it's looking a little bearish there, Felipe. Ain't gonna lie. So you got a falling wedge here on the weekly chart. We're gonna close this out tomorrow. So about 23 hours, 23 and a half hours. We're gonna close this out. You close this above this line, and we are rocking. All right. You close below that line, and I don't have a whole lot of good things to say outside of maybe like a quick false break or something happens on the daily that becomes bullish. But this right here is pretty bearish. 4 bearish candles in a row into a falling wedge. Nothing particularly bullish about it except the one area support that it touched down on right here at the 706. So that's fantastic. That's really, really, really good. But does it have enough to sustain? That's what we don't know. So let's check out the daily chart, and we'll see. We'll see what kind of reaction that weekly actually looks like. What kind of price action is building that? We can see right here. Huge drop down, tons of buying. Another drop down, tons of buying. Doji candle, tons of buying. Spinning top, tons of buying. And now today we opened up bullish. So this is one of those things where when zooming in onto a lower time frame, you can get a better idea on strength of the local move. And this is really good. All right. So all things considered, anything under here you would consider to get bought up, right? Because that's all that's ever happened. Everybody's just buying it. People have alerts set up on their phone, and they're like, yo, ETH goes down to 167. Let me know because I'm buying. And that's what they're doing. It comes down in that area, and they buy it. They buy it until you run out of buyers. That's when you start losing these levels. But this right now is a support zone. This is also considered a demand zone. There is a demand for Ethereum to be at $167.93. Why? Because people want to buy it for that price. People don't want to buy it for $177.65 until they have to, because it's the lowest ask. And when it becomes the lowest ask and you want to buy Ethereum, well, guess what you're paying? Spot price. All right, so on the local level, this is cool. I do like it. If you're like a very aggressive trader and you want a long to resistance, go for it, right? That's fine. That's a trade that you can make, right, with clear invalidation levels, right? So if you're buying here, right, and you're going in at 173.17 and you open the candle on 171.95 and you have this area over here that tells you nothing lasts under here, fine. You throw your stop under there and you shoot for over here. The problem is you could get into like an RR that's really not very good. So let's take a look. If you were to buy literally like right here, set your stop underneath this support zone. So basically underneath the lowest wick, we'll call it right here, and then set your target up to resistance, which would be right here. What do you got? With like a 1? I mean, it's not great, you know. It's a 1-to-1. You know, you're looking to gain 6%, and if you get stopped out, you lose 6%. So, not a quality trade. If, however, you're patient enough, it does pop up, it breaks, closes above the falling wedge, comes back down by the retest. Then you're probably shooting for the 100 MA, which is up here, and that would net you very different results. So 100 MA from a retest gets you somewhere around 32%. So Ethereum back at 241 is very possible. Of course, Ethereum, Litecoin, EOS, Bcash, XRP, these things are heavily reliant on what Bitcoin does. So you could have some really good plays and then get crushed and say, you know, what the hell happened. All right, let's see. Don't buy on the OTC market, or don't they buy on the? I believe so. Yeah, and that's why I said, like, I don't care, right? If they're making transactions on the blockchain, that is good. What do you think of BTC Cocos for a quickie? Oh boy, Cocos BTC. Yeah, tons of history. All right, so with all of this history, we could do a lot of really cool historical data analysis. We were joking with other coins. It's just a hockey stick, right? There's nothing going on here. All right, so clearly on something like this, you can't TA the longer time frames. You really can't even TA the shorter time frames, but you can at least get an idea of what's going on to some extent. Without any historical data, there is no, this is what it's done in the past, this is how price reacts to this. So every trade is just, you know, a high risk trade because there's nothing to really support that analysis. But like I said, what we can do is we'll take a look and see if there's anything obvious. This is the 4-hour chart. So we sort of break down, you know, what happened, right? Obviously, got listed and it dumped. You know, shocker. For 2 periods, we were sideways till a little mini dump, progressed to a new level on the downside, traded for 2 days at that level. Lost the level, broke down to its third level now. Broke down to its third level now. Couldn't hold that at all. Immediately dropped 2 levels down to, and pulled back to its fourth level. Fourth level becomes a fairly consistent level. 1, 2, 3, 4, 5, 6, 7, 8, 9. So at least 9 trading periods on the 4-hour chart before losing and retesting the lower level, which at this point would have been the all-time low. And sure, it tested that for about 9 days again. Woo! And then from there, we pumped up a little bit basically skipped up 2 levels, jumped above your previous level back to level 3, and you just kind of danced around. So you're stepping down. It's a step down pattern that has no definitive end in sight, right? It could literally just do this, and then it could do this, and then this, and then this, and then this, and then this. It could just do that, right? And there's no indication that it won't stop doing that. All right. The pattern that you have is a falling wedge. Falling wedge will typically break to the upside. So that's something to look at. If we tie this in with volume, we can at least see if there is any interest in it. And there is not. So you had tons of selling. You had even more buying. Yet the price went nowhere. And then you had 1, 2, 3, 4, 5, 6 days of like actual trading, which basically just dumped it down to a level that people were satisfied at exiting the trade. And then nothing, right? This is all garbage. It's garbage volume. Garbage volume. Terrible volume. All right, so it's a very, 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 very tough coin to trade. And this is also something that's hyper low set. So these moves here, one move, like you bought here, right? And you went down, one level essentially. Where is my thing? Bang. And you are down 6%. You go up 6%. You go up 2 levels, 13%. All right, also super low sat count on a BTC pair could be very difficult to get into. Even with this ridiculously terrible volume, it doesn't mean that the order book's not budging. You know what I mean? Giving you any zone to get in. You just have orders stacked over here. So you got tons of orders stacked at 14 sats. You're currently trading at 15 sats. And if you buy at 14 and you sell at 16, it's a hell of a rip, right? For doing nothing, you bought at 14, you sold at 16 for a 14% rip. That's great. But it's, at this point here, it's really just a gamble. If you really do want to play something like this, wait for it to find support for a third time. So 1, 2 is not a trend. Third is validation. Get a third touch with support. Then try to buy that and push up to resistance. Okay? That's what I would do. All right, cool. Cool. Let's see. Ivan. Hello, Ivan. What do you think of OAX BTC? Let's take a look. OAX, huge pump and dump. Wow, crazy. So 4-hour chart is you're kind of finding a flat line bottom-ish, similar to this ranged out zone here. Similar to this zone here. Right, coming off of a big pump. Rounded out bottom, flatten, quick check. Big top. This is more range. Big push and then monster dump. So there's a few things about this on the 4-hour chart that are okay. And that's the convergence of like the meeting of minds. It's all these MAs that are converging. Which is nice, so it's very easy to like blast through like a whole bunch of levels at the same time. The current trading is bearish. You got a thumbtack, dropped hammer right here. So that's it's as much as a bullish candle as it is. The body is so weak that it's barely even valid. But, we could take it for what it is. This is worrisome, right? Because this is a pump and dump, right? I mean, call it what you want. But, the pump started here, right? And it ended here, and you lost 100%. So, I mean, that, pump and dump, right? Pump and dump. So, good exit coin. Pump it up, get some people interested. You could tell, like, this kind of, like, rode for a little while, and then and then it was like a pump and dump smash, and you're basically just back to it. So, you could look at that stuff as like a false break and just completely ignore it. Say, all right, well, this is basically what price is doing. And I'm just going to, avoid that nonsense altogether because it's like a joke, which it is. And then you're right here. Right? So, you just like pretend like it never happened, and you're just right back to where you were. You're just back in that channel doing your thing. There's your resistance. There's your support. Nothing has changed except for this big monster, false breakout, which is just there for no reason. All right. So on the daily, this is kind of what I'd be looking at here. You're making higher lows, right? For a moment, you were making higher highs, right, until this candle right here. So you could set this as a massive swing fail, but I don't think it's not gonna give you any help in trading. Really, what you're looking for is maintain the channel, because the channel at least shows support. So I would be longing the channel, right, and then selling at resistance topside channel. And these are probably good plays. Let's see here. I'd say 11%. If you finish tomorrow, it'd be like 12.5%. It's pretty good. All things considered, right? If you were to buy, you would have sold the next day. Then you would have had to wait 1, 2, 3 days to buy again. You would have sold the same day. Then you would have had to wait 1, 2 days to buy again. You would have sold the same day. And then you would have had to wait 3 days to buy again, and you're still holding on to it now. All right, so I mean that's one way to look at something like that. All right. All right, rapid fire. Any other charts before we shut this puppy down for the night? Again, big day in the market. Not price action wise, just for what it is. Quarterly close, weekly close, not weekly, almost weekly. Monthly close, quarterly close, daily close, holiday weekend, volume the worst we've seen in about a year. Really just, really cool stuff. Try to just cover what I could, questions-wise, and, things like that. If you have, I know we say this all the time, but if you have questions that you want covered on the stream, hit me up or hit Jacob up or put it in the Discord and tag us so that we know, so that we could kind of, try to put something together. I'll go through anything on the fly. I have no problem with that. But if it's something that, more examples or something would be better, and we don't have to waste time on stream looking for those examples, that's even better, right? Because then I could spend some time off stream putting together a few examples and then, showing them, and that might help the majority better. Whatever the case may be. If you got some questions or something, just let us know so that we can help you guys out. That's kind of like the whole point. All right. So it looks like we're good on charts. Everybody's cool. All right. Very good. Enjoy the rest of the holiday. If you're in America and you're off tomorrow and Monday, good for you. That's fantastic. Crack a beer, have a barbecue, see your friends and family, make the most of it. That's fantastic. If you're not, sorry, cross the pond and come on over. You know what I mean? We'll have a beer. All right. Until then, we'll be back again tomorrow, so no worries on that end. We'll cover the weekly close tomorrow. Very cool stuff again. And then we'll have the update out in the morning. So we'll piece that together so that you see what's going on. All right. But be careful. This is kind of like nasty trading, especially end of the month. So I know we did just close it. I sort of allow some things to happen for the next day or two before you go heavy on a position. But we'll be on the Discord. All right, so everybody enjoy the rest of the night. Enjoy the rest of the weekend. I'll catch you tomorrow. And happy trading.